Welcome traders to this video analysis brought to you by Admiral Markets, where I take a look at the major currency pairs and why they are at major levels according to my analysis. So that includes the euro dollar, pound dollar, dollar yen, and odd USD. But before we take a look at the charts though, please be aware of the fact that this video is intended for a global audience and may not be suitable for everyone. To find out if it is and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and other financial products is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only and is not advice. And by continuing watching this video, you agree with this disclaimer. Okay, starting with the euro dollar, of course, we are starting a new month of March, so that means that the month of February and its trading has been completed. And if you look at the monthly candle of the euro dollar, we see a bearish candle, although a small candle. So that is a continuation of the downtrend so far, although January's low was not broken. And if we look into the weekly chart, we see basically 3 weeks of sideways movement, and then last week the breakout below that small consolidation of 3 weeks. You can see that a bit better if I zoom in. Here are these three candles right there where I have the green arrow. So last week's breakout, I think a very important breakout because we are heading towards a significant consolidation, and if it would have taken too long for the downtrend to continue, I would have had some hesitation on an immediate downtrend continuation, and maybe we could have had a bigger correction up to, for instance, the 118 level, or maybe even, I should do it like this, the 117 level or the 120. That does not seem to be the case right now, as we have a good breakout and continuation candle with a decent sized candle of the weekly candle and also a close near the low. If we then zoom into the daily chart, you can see that breakout candle right there. So I myself am looking for shorts upon the pullback to this trend line around 112.75, 112.50. In my opinion, that is my personal opinion here, and looking for a continuation of the break of this triangle to the downside. Now, the high of that Thursday breakout candle would be where I put the stop loss above his 113.90, and I'm looking to enter 112.50, 112.75 for a downtrend continuation on this euro dollar. And if we add a fib to that daily candle, you can see price stopped at the 23.6 fib. Next fib could be the 38.2 or the 50, and that of course equals not only the trend line, the broken support now become a resistance, the magenta trend line, but also these bottoms right in here on the left. Now if price doesn't get that high, if it doesn't retrace that high, then I would need to look for 111 to break, which is the bottom here on the left, and then I will look for setups below 111. But at the moment, price is a bit too close to that support level for me to consider short right now. I mean, from a daily, weekly, 4-hour perspective, it's a bit too close. Maybe on a very low time frame, if we look at the 30-minute chart, perhaps it's not ready, in my opinion, as yet. It could break. You never know. Of course, it could be a fast break like this right now. But for me, a bit too early. Before looking at the other currency pairs, please be aware that we have a great lineup this week. On Monday, Nenad is going to take a look at the weekly FX recap, and on Wednesday, fade out strategy. I myself am going to take a look at the Fibonacci and wave trading on Tuesday and Wednesday, Forex strategy, and together on Thursday, we're going to take a look at the best indicator combinations in the world of Forex. So I hope to see you in one of these webinars. With that said, back to the charts. Pound dollar broke through the long-term resistance trend line indicated by orange and has now basically continued in its uptrend, and the uptrend channel indicated by the purple lines. Pretty nice. It's at an important break or bounce spot as we speak. Price reached the pink here resistance spot from the left, important resistance here. Reached that spot, and what did it do? It showed engulfing twins, bearish engulfing twins. So that could be basically a signal that this uptrend channel is going to be in problems for the moment. And we are at a spot where either price is going to break down or bounce up at the bottom of this channel. Now, considering the engulfing twins are bearish, I'm expecting a break to the downside here for the pound dollar and expect this uptrend channel to basically break. The target of a downside, in my opinion, any downside setup that I can see It's not, of course, yet occurred, and there's no confirmation as yet that it will occur. But if it does, I'm aiming for the 78.6 fib for the moment. Could even be the 61.8, depending on price action. Why would I only aim for that? Because if I look at the weekly chart, I can see a pretty strong upside. I already see, contrary to the euro dollar, where we had just a couple of weeks sideways, I see 1, 2, 3, 4, 5 candles to the upside. So to me, this bearish momentum is definitely potential of having some problems. And if you look at the monthly chart as well, we had February a monthly candle. So for me, the potential here of the pound dollar to make a bigger correction is pretty decent. What I would expect actually is a retracement of last month's bullish candle, and once it gets retraced, to see it bounce back up and perhaps continue higher to, for instance, by putting a fib on this entire downside to the 38.2 fib at 158. So it's a bit of a difference with the euro dollar in my opinion. Euro dollar looks bearish. Pound dollar at the moment looks bearish upon the break, but I think the bearishness is limited in its scope, and we could see already support kicking pretty fast and then upside continue from that support level when I look at the the bigger picture and the candles on those time frames. All right, the AUD/USD is kind of in the middle between pound and euro dollar. I think euro dollar looks bearish, pound dollar looks bearish, but with a hint of bullishness potential later on. AUD/USD is kind of in the middle. It has a doji with a slight bullish close last month, so it's not as clearly bearish as the euro, but not as clearly bullish candle as the pound. It's had 3 weeks of correction. Last week was a bearish candle, though, slightly. It did have engulfing twins as well. So ultimately, it is at an interesting spot where it could break 2 to the downside. We're looking at this trend line. It's been caught in this consolidation for quite a while. I would be interested in seeing what happens here at this support line, a break or bounce as well for the Aussie. Specifically, I would say more the break would be interesting on this AUD/USD. Now, all 3 pairs are highly vulnerable to some movement this week because there's a euro, pound, AUD, and CAD interest rate decision. Specifically, the AUD and the CAD are expected perhaps to lower their interest rate by another quarter from 2.25 to 2 on the Aussie, from 0.75 to 0.5 on the CAD. Euro, pound are expected to stay the same. So there's a lot of news events, a lot of fundies as well, fundamentals that are behind these pairs. And I think from a fundamental point of view, the pound is looking pretty strong for this year, similar to the dollar actually. Probably dollar a tad stronger. The euro looking pretty weak, I would say. So those are fundamentals to keep an eye on and could be very important for trading as well. Now you can see a lot of trend lines here at the bottom of this dollar-yen chart, basically indicating the correction and consolidation that is happening at this point on the dollar-yen. And if I zoom out to the daily chart, you can see that that consolidation is occurring right after this huge uptrend here on the dollar-yen. And most likely, there are 2 variations. Most likely, this one's the most probable, where you have an A, B, C, D, E triangle, and then an upside break. Now, that E part, we're probably in an E part, but whether this E part indeed finished here or if it will finish lower still remains the question. Ultimately, this spot here at 120.50 and this spot here at 120.80 are pretty key resistances for that triangle, and whether we get an upside break and when we get the upside break. If those levels do not break, there's still the potential that the E part of the triangle is not completed and we get something like this, and then the E can turn from a lower point for an upside. The not so likely variation at this moment is a bearish triangle as well. It's possible A, B, C, D, E, and then down. But well, it's actually a bit different. Sorry, it should be like this then in that case. But that for the moment I would not think is likely. At the moment I would say the E is either completed or will be completed at a lower spot, and then I would be interested in the breakout to the upside here on the dollar-yen for a uptrend continuation. This wraps up my recap. Thank you for joining. Hope to see you in one of these webinars this week, and wish you all good trading and happy hunting. Cheers.